Something big is coming for Tesla stock. As I said in the last video, the next 48 hours are crucial, a true make it or break it moment for a potential rally that could send you into the $300 range. Now, what do I mean by something big is coming? Well, tomorrow you have a lot of very important economic data. Tomorrow is the last day of fiscal year 2023, so I want to really give you guys an explanation of why this is so important. But likely as you are watching this video, Fed Jerome Powell is making a speech that will affect the markets heading into tomorrow. You also have some Japanese data that comes out tonight, which can be very important. Something that a lot of people fail to remember is, I know you guys have heard this before, China owns the US. No, they don't. Japan owns the US. Japan is the single largest foreign entity that owns US treasuries. So whatever happens in Japan tends to affect the US quite a bit, or at least affect the markets. Now, what's also coming soon for Tesla is delivery numbers, which will be here in just the next couple of days. So we're going to break all of this down, give you the latest news and analysis on our markets. We're going to look at bond yields. We're going to look at the yield curve inversion, which is continuing to uninvert, a strong sign we are heading into a recession, as well as what in the world is going on with oil. So if you like to make money and you want to make more of it, if you want to stay up to date with everything going on every single day in our markets with a select focus on Tesla stock, well, hit that subscribe button because this is your place to be. We keep you fully informed and go deep on all of these topics with a big focus as well on the psychological aspect of the markets. I think a lot of people fail to bring this information to you guys here in this community specifically, but bond yields, oil, recession, what's going on in the markets, broader rotation affects Tesla stock specifically because Tesla has a high beta. So this information is more relevant than ever. And if you're ready, let's get into it. So let's start with some of the option flow activity that we are seeing today. You have 568 orders totaling $117.33 million with a positive order value of 40%. So it's not that great here today as far as the percentage that is positive only being 40%. But in contrast to what we seen yesterday, the dollar amount is a lot smaller. So what we're seeing today is $117 million worth of options. I would argue a lot of this is longer term hedges on Tesla. But this is actually really good because what we seen yesterday was over 1,000 orders totaling $2.5 billion with a positive order value of 67%. So some long-term upside trades we seen yesterday, whereas today a very small dollar amount is going into longer term hedges. That is probably one of the reasons, upon many others, that Tesla stock is in the green today by over 2%. So the option activity today, although the dollar amount is small, the positive order value is low. That is really good. It's not showing you there's a lot of people that are fearful in the near term or for next year. Today and tomorrow are specifically important because if you're a hedge fund institution, well, 2023 fiscal year ends on Friday. So any profits you want to take, any buying of stock you want to do, any hedging of your portfolio for 2024 you want to do, most of that happens by this Friday. So if you're not seeing a lot of that long-term hedging, if you're seeing the opposite of that in long-term bullish positions going into Tesla options, that's a really good sign for 2024. And so far this week, that's all you have seen is really good things implied for 2024 in Tesla stock. This even comes after some of the news we have went over in the past couple of days, how Deutsche Bank just lowered their delivery expectations to around 15% for next year with Tesla. They cut their price target as well from 300 to 285. So even considering Deutsche Bank just drastically tried to lower markets' expectations for Tesla deliveries next year, Tesla stock still seeing some very positive inflows in the options market, is even better news. The UAW's president is reportedly targeting Tesla workers to encourage them to unionize. UAW membership has fallen to 400,000 from more than 1 million in the 1970s. Sawyer Merritt goes on to say what we're all thinking, that the UAW president is unlikely to be successful in this regard. Why is this? Well, for GM Stellantis owners, they want cold hard cash, because why would they not? Tesla employees want Tesla stock options, because those stock options can make you a lot of money if your company is doing well and the stock is performing well. And it's pretty clear. For GM Stellantis employees, they want cash, because stock options are basically worthless because the stock isn't doing anything. So it's very unlikely Tesla will unionize anytime soon. We are also getting some images from Giga Shanghai's lot, and you can see a fresh new batch of Highlands that are ready for export, and this is quite the batch, at least a couple of hundred here in this parking lot. So the ramp is going exactly as planned. Honda has officially unveiled their first mass-market EV, the 2024 Prologue, with up to 300 miles of range, a 85 kilowatt-hour battery, 155 kilowatt charging, starting price in the upper 40,000 range, an 11.3-inch info entertainment screen, 5 inches longer than the Model Y, rear-wheel drive and all-wheel drive versions, coming to the US in Q1 2024. Elon Musk is mocking other car makers, saying, quote, "The competition is coming." This is in regards to this picture that we shared yesterday, just the dominance, the sheer dominance of Tesla compared to other brands is off the charts. And this is in reference to everyone over the years saying the competition is coming for Tesla. Is it really? Not really. We haven't seen much competition for Tesla. Even Tesla compared to Chevrolet, which is the second best-selling EV brand here in the US, well, Tesla's still doing almost 10 times the amount of sales for the first half of 2023 compared to Chevrolet. There's no competition for Tesla, and there likely will not be for a very long time. If you look at this chart, which is basically taking the same chart that we just looked at and adding them all together, Tesla is doing, almost 50% more deliveries than all these other car makers combined in the first half of 2023. And this gap is likely to widen even further throughout the rest of 2023. Now, this is an interesting chart. This is showing you the days in which Tesla stock was one of the top 3 most popular stocks with retail investors. And you can see in 2021, not much activity, at all. That was because Tesla stock was flying. Well, look at the end of 2022 until now. Almost every trading day and every month, Tesla is within the top 3 spot of the most popular stocks that are bought with retail investors. And it's clear why. Tesla's stock is dramatically undervalued. Retail investors, you could see from this chart, they don't want to buy at the highs. Retail investors, they're the ones buying at the lows. Buy low, sell high is very prevalent in retail traders' minds. And that's obvious with this chart. So congratulations to you if you're buying Tesla stock today. That's still down over 40% from all-time highs. Morgan Stanley's Adam Jonas believes, well, Tesla could reach all-time highs here within the next 12 months or so. He came out today to reiterate his $400 price target on Tesla stock. This is a 12-month price target, so by this time in 2024, we could see Tesla stock over $400 per share. X's CEO Linda says 90% of the top 100 advertisers have returned to the platform in the past 12 weeks alone. About 1,500 have returned, and she goes on to say that profitability is possible by early 2024. Although when you buy Tesla stock, you are not directly investing in X, but superficially you kind of are, because Elon Musk owns 20% of all Tesla shares. If X does poorly, Elon will sell Tesla stock. So this has a direct effect on your investment. If Elon sells, obviously that's not great for Tesla's stock price. That's simple. If X does well, Elon is not likely to sell any Tesla shares. So this is very good news today. Select superchargers in New Zealand are now open to all electric vehicles. Look at this fascinating image here on X from AJ here on X as well. It says Toyota, the world's largest automaker, is sick, very sick. Toyota struggles to generate continuously positive free cash flows, making its stock 4.4x more expensive than Tesla's stock on a historical free cash flow yield basis. Now, I used to talk about this a lot more, but if you're looking at PEG ratios, which is really the only way to value a growth stock, which is the PE, price, earnings, but also factoring in growth, Tesla is by far the cheapest big tech name out there. It's cheaper than Apple, it's cheaper than Microsoft, it's cheaper than Google, it's cheaper than Amazon, it's cheaper than Nvidia. Tesla today, because Tesla is growing at rates that you will not find with other companies. And for an Apple's PE ratio or a Microsoft sitting at almost 30 and Tesla's about twice that, but an Apple which is negative year over year growth and Tesla that's growing at 50%, which stock is actually cheaper? It's Tesla. Tesla's Model 3 Highland uses a unique strategy to reduce wind and road noise. This article goes on to point out the obvious, that due to the lack of an internal combustion engine, you really hear the wind and road noise. Well, Tesla, in this latest model of the Model 3, or update to the Model 3, Tesla began using double pane glass around all of the car, which helps dampen the noise. It will be interesting to see if this added glass layer does affect margins at all, or if margins are actually better on the Model 3 Highland. Now, obviously, this is arbitrage, because if you make one vehicle, well, your margins are not going to be great. If you make a bunch of vehicles, if you scale the vehicle, your margins get much better. So we won't probably know this until we're fully scaled at multiple different factories. But as of right now, like we said previously, the scaling process is going exactly as planned. And some would argue better than expectations. We're seeing a lot of Highlands that are getting shipped out of China. Troy TSLA shared this photo on Twitter that points out over the past 14 quarters, you have gotten your delivery numbers for the prior quarter on the second day after the quarter ends. So this falls on the second day of a new month. So it's expected to be released on Monday, October 2nd. And as you know, and as Electric is pointing out, the estimates for Tesla deliveries are all over the place. I don't know where they get some of these estimates. Bard has a 493,200 delivery number for Tesla. Where do they get that number from? My estimate is around 434,000. It wouldn't surprise me to see it in the low 440s as well. Troy TSLA is at 442. That would not surprise me. 493, I would expect to see a 10+% day for Tesla stock if you come in at 493,000 deliveries. Deutsche Bank came out yesterday and set a 440,000 delivery number. RBC Capital Markets expects 462,000 deliveries, and that's roughly where the average consensus estimate is, around 461,000 deliveries. So some are way higher, some are way lower. I'm not very optimistic about this delivery number because I like to listen to Elon and what he says. During the last earnings call, CEO Elon Musk warned that Q3 2023 might be different. He said that production will likely be down due to factory shutdowns for upgrades. And if you follow Tesla, you have seen the factories that will shut down for a couple of days at a time. The question is, I guess, if you're expecting huge delivery numbers, is one, I guess this isn't a question, but the output wasn't affected much at the factories. Number one, we get a similar amount of deliveries as we seen last quarter, 465,000 or so. But you also see the rundown of inventory, which that is possible. Tesla had about 19 days worth of inventory. So we've seen that rundown, especially in Europe, in Australia. They basically ran out of vehicles and inventory was pretty low here in the US as well. So if Tesla did sell a lot of those vehicles in inventory, that could boost the numbers to around even 460,000. That would be pretty appropriate. 493,000. That's unrealistic. Okay? If that happens, great. Tesla stock's going to do fantastic, but that's pretty unrealistic. But even just being close to last quarter's number is probably going to be enough for a positive reaction with Tesla's stock price. But this rundown of inventory, that will actually affect next quarter earnings quite a bit. It could boost the margins more than Wall Street is expecting. Because again, think about it like this. If Tesla produced vehicles in Q1 or Q2, well, they spent the money to produce those vehicles already. That's already been realized as an expense for Tesla's business. If they sell those vehicles now in Q3, they get to realize that revenue. But they didn't spend the money this quarter to make the vehicle. So the revenue could be much higher than expenses this quarter and lead them to a higher net profit. That could be really good for Tesla's upcoming earnings. And that argument where Tesla produces more vehicles than they sell, that could be the opposite. Tesla might sell more vehicles than they produced in Q3. Just imagine if that were to happen. Let's now break down what's happening in the broader markets today, go over some charts, look at oil and the yield curve inversion, which is starting to uninvert. The data today did not come in too crazy. Initial jobless claims were lower than expectations, coming in at 201,000. Your GDP numbers, actually, let's go ahead and refresh this page just so make sure we have the latest numbers. Your GDP came in at 2.1%. Your initial jobless claims actually came in at 204%. Your PCE final numbers really didn't move around all too much. So nothing was really stand out here to give you a big bullish or bearish reaction here in the markets. What you're actually seeing today is an oversold bounce. Yeah, you bounced right on, if you're looking at the broader markets, your uptrending line from the lows. You bounced right here. So until we get new information, you're probably going to be range bound. I don't expect a huge move higher from here, but I don't expect a huge fall until we get new information. Now, you don't have to wait too long because we're going to get new information coming tonight and tomorrow morning. Now, at 4 p.m. Eastern Standard Time, so the time you guys are likely watching this video, Fed Jerome Powell is going to be speaking. That will affect after hours today. It will affect futures overnight tonight. So that will be very important. And then you're going to get a lot of data out of Japan. The unemployment rate, job applications, CPI, retail sales, industrial production. All of that data will be important. If you get big moves, if you start to say, hey, Japan's inflation is ramping up, that's actually a great thing. Japan hasn't seen inflation in a very long time. That's why they had the lost multi-decades. That's why the Japanese stock market has not hit an all-time high since the 80s, early 90s. It hasn't been great for Japan. Now, coming tomorrow morning, that's the big data. You're going to get personal spending, personal income, as well as PCE. We will talk about this a lot more in the video later on tonight at 9 p.m. So let me know down below in the comment section if you are going to be watching that video. That one will be very important. We're going to break down exactly what Fed Jerome Powell said today in his speech at 4 p.m. If there was anything that is notable that changed from the FOMC press conference, that will be very important to point out, as well as go over the data from Japan and if that will be affecting our markets. As you know, crude has been rocketing higher recently. As of June 27th, the price of oil was $67 a barrel. Today, it's almost $92. Yesterday, oil was up almost 4%. Today, it's down over 2%. So that is helping to give the markets kind of this bullish feel to it today, where stocks are going higher. A lot of it, I would argue, is oil actually falling. But you guys got to remember, since 1945, you have always seen a spike in oil before a recession. You could argue this was the spike in oil, but we haven't seen the recession so far because people have had a lot of money to spend. Or you could argue that this is now the spike in oil, which could mean you're almost certainly heading into recession within the next couple of months. 10-year Treasury yields are down 2.5 basis points today, and 2-year Treasury yields are down about 6 basis points today. So do you know what that means? The yield curve is again uninverting today. The yield curve on the 10 and the 2-year basis is now only inverted 49 basis points. So if we pull this out, it's not usually when you see the inversion of the yield curve that's the problem. It's the uninversion. When you start to uninvert, it typically happens right before a recession if history is any guide. So you're seeing that uninversion. You still have more uninversion to go before it's an imminent problem. But usually once you start to uninvert, it goes pretty quickly and you're within just a couple of months of a recession. This is something the Fed is not going to show you. This is something CNBC is not going to tell you. But as far as history of the yield curve inversion, this is something you should be paying very close attention to every single day. That is why I bring it to your attention every single day. My personal favorite yield curve inversion is the 10-year and the 3-month inversion. This hit a low, meaning it was inverted 1.88%. Today, it's only inverted 0.97%. So you are drastically uninverting on the short end of the yield curve inversion compared to the 10-year bond yields. So this, again, not a great sign for the economy and for an upcoming recession. That is specifically why the next 30 hours or so are going to be so important. Because, hey, if the data tomorrow comes out really bad and personal spending is not good, that's a problem. Because 70% of GDP comes down to personal consumption and personal spending. So if people just don't spend that much money, if they start to cut back, you're going to be in for a big problem. Now, Tesla stock on the actual charts looks pristine, perfect. Tesla stock is money on the charts. You bounced right on your 100-day moving average. You also bounced on the longer term uptrending line, okay, which is right here. So as long as we don't get really bad data that scares the markets or deliveries numbers coming out on the 2nd, on next Monday, that drastically sends the stock lower, you actually could be in for quite the upside move. And especially if you do break out above about 265, that's where things could get pretty explosive to the upside. If you take a look at the MACD here on Tesla, you are curling down. You have went negative a little bit on the MACD line, this yellow line right here. If the blue line does go negative, the signal line, that is a bigger signal of potentially downside to come. But the yellow line going negative, not a huge deal. Again, if the blue line goes negative, that's where you want to maybe be a little bit more defensive. This could happen theoretically if tomorrow is a big red day. So tomorrow is going to be very important, really, to gauge how investors are feeling about 2024 and how investors are feeling about Tesla stock. Tesla stock is up 2.6% today, so I would make the argument that people are quite bullish for 2024, regardless of what you'll hear from Deutsche Bank and other bearish firms. If, for whatever reason, the markets really crumble, if it's something Fed Jerome Powell says, if it's data that we get, your important level is the 100-day moving average. You're going to fall under that. Just expect that. That 100-day moving average is at $241.55. So it's about $5 under where the stock currently is at $246.82. So it's not going to be hard to fall under that. If you fall under this downtrending line, that's where you could get more downside, and that level is at about 235. That's pretty much where we bounced at yesterday. So you've seen a lot of support. If things get bad and you fall under that, then your next stop is the 200-day moving average, and that is at $205.40. I think that is a reasonable fall I mean, I don't think that's too crazy, even considering back here in August, you were around, what, 212, 210 for Tesla. So to get back down to 205, really, that's just a huge buying opportunity. If markets got really bad, you could fall to maybe 190, 180. If we do actually go into recession, if the yield curve uninverting is showing us that we're imminently heading into recession, well, that knee-jerk reaction, any potential emergency Fed rate cuts or anything along those lines, could easily send Tesla stock back to the 180, 170, or maybe even 160 range. And that would be, as I have said many times, a sell your kidney kind of moment to buy as many shares of Tesla as possible, in my personal opinion. I'm not a financial advisor. I'm not a financial planner. I'm not your uncle. I'm not your dad. I'm not your nephew. None of that. Don't listen to me. Come to your own conclusions. That's my estimates of what I think could happen and what I would be doing. Obviously, I'm not going to sell my kidney, and that's not a financial recommendation. Do not sell your kidney. But metaphorically speaking, if you get to those prices, you want to do whatever you can possible to buy as many shares as Tesla as possible. Or at least that's what I plan to do. So that's going to do it for this video. Hopefully you learned something. Hopefully you feel smarter after watching this video and more up to date on what you need to know over the next 30 hours or so. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us live in real time, we're putting on some hedges in our portfolio. We're buying Tesla stock. We're buying long-term options, long-term trades, some short-term, some YOLOs in there. We're doing a little bit of everything. If you guys want to come join it, link down below in the description of this video. You guys enjoy the rest of your day, and I will see you in the next one.